Hope everyone is doing well. This is going to be a video over May the 24th. Coming into the day, the market gapped down. Here is the low of yesterday. I'll make it blue. Gap down, trend from the open. And typically when you get a trend from the open, there's a 60% chance that the market goes sideways and forms a trading range, kind of like this. So the market rallied, 60% chance the market's going to go sideways, form a trading range. 20% chance the market will, trying to find this happened recently. Here's a 20% chance. Trend from the open, strong breakout, and we just drift all the way down up into the close. This is an extremely strong day. Most of the time, if you just go back on, let me delete that. If you just go back on trend from the open days, gap up or gap down, rally, trading range, trend from the open. Trend from the open, reversal. And this can be a trend from the open, even though it went sideways for a few bars. Whenever this happens, the more sideways it goes on the open, the greater the chances of the reversal. Trend from the open and bear trend, sideways into the close. Even though it still closes a big bear day, it went sideways, so it fulfilled the minimum. So anyways, going back to what I was talking about. Strong sell-off, this blue line. We also had a sell-off to around 50% of this low to this high. And with this being as strong of a sell-off, most traders will wait for a couple legs down. Sell the close, bears scaled in. Bear breakout, bears disappointed. It's a micro channel, you often get a second leg down. And the market went sideways into a triangle. 3 pushes, 1, 2, 3, 1, 2, 3. Upside breakout. This was a possible second leg trap in a trading range. And I'll start from the beginning, but just this is more of an overview. When you get a breakout after a range that's this big, the market often goes sideways, which is what happened here, and it remained mostly a trading range day, although it popped up at the end and closed on its high. It's still a small bull day. So here's the open. If you think about it, here's the open, here's the high, there's a big tail. But I'll explain that in a minute. So let me do it like this. So first bar of the day, it's bear bar, but tail on the bottom. Probably, it's not always in short, probably buyers below, but may get all the way down to here, or yesterday's open before there are buyers. Consecutive bear bars probably always in short, strong enough for a second leg down. However, it's sell to close, stop up here, but you may get an opening reversal. Probably a second leg down. Breakout, so probably always in short, but again, we're close to the lows and may get a bull bar closing on its high. It'd be a second entry buy. And that might be enough for bears to exit, but we didn't get that. We got a bear breakout. So sell the close, stop up here. And again, when you get a sell the close bar, stop up here, another bear bar, you can move your stop, another bear bar, move the stop, another bear bar. Typically when you get 5 or 6 sell the close bars in a row like this, the market's going to go sideways soon. And that means that eventually you're going to get a bull bar and traders will be disappointed. So, do you really want to sell this close when 50-50 chance the market will go up to here before it goes down to here? No, so a lot of traders will start taking profits, and that's what happened there. So this is probably more profit taking. You will have bears who will sell this high, sell more higher. They see this, they think, what a gift. On a smaller time frame, it's 2 legs up. So traders will sell. Now, the one thing traders do know that's most likely is you're probably going to go sideways here. So as strong as this is, it's possible we do this. It's not likely. Therefore, sideways is most likely. Therefore, traders don't want to put a stop up here. So we'll take profits. We'll also probably test up to here. But we need to see buying pressure first. Low one short, but after I can't talk right now. Low one short, but after consecutive bull bars, probably buyers below, and we may get a higher low here in the second leg up. Even if we do get a new low, there's probably buyers. And the bulls tried for a second leg. Bulls bought the close, disappointed by this bar, scaled and lower, tried to get out of break even. Sold off, so bear breakout, but down here we found buyers. We're breaking out to a new low, far below the moving average. And if you think about it, if you're selling here and putting your stop up here, what's your objective? Are you trying to go for 1-to-1, 2-to-1? It's probably not 60%. You're going to get a measured move down. Therefore, probably buyers below, which means bulls, bears may be disappointed. So bad follow through for the bears. Sell the closed bears, disappointed. We'll try and get out of break even, which is what happened here. The rest of the bears gave up as this bar turned up. So you will have some bears that may give up here. So it's a credible, always in bears, which really just means the bears swing trading, probably get out here and wait for a couple legs up. I wouldn't stay short here. Probably going sideways into a trading range, so you may get a couple legs down. Often before the market reverses at a credible area of resistance or support, there's often some kind of second entry short that makes you question the trade. So in other words, I'm trying to find maybe it was over here. But anyways, not super clear here. But you have two legs up, and if this bar would have been a big bear bar, this would have been a bear bar closing when it's low, it might make traders question. In other words, it makes it hard to stay long. So you're long, disappointed, outside down, hard to stay short here, but that's the right thing to do. And trust your stops. Now you have a second entry buy, and then the bears tried for a second entry short, and they couldn't get it. So it's consecutive inside bars. It's kind of an IOI, second entry buy. Tight trading range. Bull breakout at the moving average, probably testing up to here. Stronger bull breakout bar, consecutive bull bars, probably always in long and strong enough for a second leg up, but there's always the risk this is a second leg trap. So bear channel, maybe you get a micro double top and a sell off. I think we had that the other day where, if I can move my mouse around, yeah, here it is. So this is kind of an inverse. So bear trend, sideways on the open, strong breakout above many highs, and you're thinking at this point, this is a strong enough bull breakout that the market's going to go for a strong trend, measure move up, disappointment, more disappointment, close these gaps, testing the highs, but it's weak follow through, and then outside down, bears giving up. Bulls had a double bottom, they couldn't get it. And we crashed. Well, we didn't crash, but we sold off back to the bottom of this buy climax. Whenever you have a second leg trap, and it does, in fact, end up being a second leg trap, and a second leg trap just means failed breakout. So you have a breakout, odds are you'll get a second leg up. Second leg traps, it's the opposite, where you may get a small second leg, but it reverses back down. And just like with this day, the bulls were hoping that this was a second leg trap that would, broke to the upside. They were hoping this market would sell back down to here. They weren't expecting a bear trend, but they wanted a trading range. And the bulls got a strong second leg, tested the open of the day, where it found sellers. Open of the day up here. 3 pushes up, 1, 2, 3. So it's kind of a wedge top. And anyways, a lot of bears would get out and probably would have a deep pullback. It's a gap down, bear sell off. So here's a trend line break. You may have to have a higher low major trend reversal. But anyways, the point behind that is when you get a rally this strong, even if it is a possible second leg, it's probably not going to fall too low. 3, 4 consecutive bear bars. So why not? Is it sell to close? Maybe here, but the problem with selling the close here is, think about the fact of what I just said. It's a second leg, we had a second leg, possible second leg trap in a rally. If right here, if this is a second leg trap and we sell off to the lows and form a trading range, you don't want to be selling down here. So if we rally even further, it increases the odds that even if we get down here, it's going to be a trading range. So you definitely don't want to be selling down here. So if this is a leg up, here's the way I would recommend thinking about this. You don't have to do this. You can kind of imagine it, but let's say here's the start of the leg, here's the high of the leg. Here's a 33% retracement, here's a 66% retracement. What that does is creates an upper third and a bottom third of the range in the middle. If this is truly going to be a trading range, I want to try and buy somewhere down here. If it's a bull channel, I at least want to buy here. It's great if I can buy here though. So buying anywhere in this price level is not a bad idea. So we're getting in the middle, we're getting close to the bottom third. So if I buy down here, put a stop down here, decent risk reward. Strong enough sell off though. We're in the buy zone, but I want to wait. I don't want to sell this. I don't want to buy this. I want to buy this. Same thing here. Disappointment, but a lot of bear bars. Deep pullback. Boom. Big bear bar, but strong enough bear bar might get a small second leg down. Low probability of a measuring gap. It's a wedge. 1, 2, 3. Breakout test over here. Small bull bar. So the question is this strong enough for a second leg down, or is this bull bar strong enough to reverse the market? And looks like the bulls are trying to reverse the market, and boom, bull breakout. So what about buying this close? Can you buy, double bottom here? So down and up, down and up. Some bulls will buy the neckline of this double bottom and bet on a measured move up. And you had a deep pullback, but then you broke even higher. And eventually it becomes buy the close, but again, just like down here, it's the opposite for this leg. Do I want to be buying up here in a trading range? Probably sellers up here, sellers back at this breakout point, sellers at this high close, and sellers back at the open of the day. So this is the sell zone. And a lot of bull bars, so probably a small second leg up, but the reality is if a trader's selling up here, they're probably going to make money. And you can see they did. Even if they sold this high, scaled in, made money. Big bull bar, second leg up, just like sell off, second leg down. And there's a lot of second legs and wedges. Wedge top, 1, 2, 3. 1, 2, 3. Wedge top here, 1, 2, 3. Double top here. So are bulls going to buy this close or sell it? Well, they're probably going to sell. And bears know that, so they're going to sell too. And they'll sell, scale in higher, sell here, sell above the open of the day. It's a wedge, 1, 2, 3. Bad signal bar, but trading ranges often have bad signal bars. So some traders will just sell the close and at least take partial profits and hope that maybe we get a breakout. And if they're disappointed, they may just get out right here. Second entry short, but strong enough bull bar. May have a small second leg up, a little bit of a surprise. And, again, stop entry buy, top of a trading range, probably going to fail. Big bear bar. And this is the frustrating thing about trading ranges. There's not a clear stop entry because traders are just selling. They're selling breakouts, selling new highs, selling bad stop entries. And that's a whole other topic for later on. But 3 pushes up, bears sold off, and just like the bears tried to break out to the upside, the bulls tried to break out to the upside and failed. The bears are trying to break below these lows. And guess what's probably going to happen? Bulls are going to buy down here. And they did. So, bears, again, it's the opposite. I could take this, drag it over here, and here's that upper third. You want to sell somewhere, you certainly want to sell above here, somewhere in the middle, this prior leg from here to here. Here's the upper third, you can sell. And bears took profits. A lot of bull bars. and this is a tight channel. So again, I'm not advocating just selling at a limit order. This is a strong enough, 4 consecutive bull bars, strong enough for a second leg up, increasing the risk of an upside breakout. No reason to sell, and then boom, strong bear bar late in the day, strong bull bar late in the day. Strong enough surprise you make it a second leg up, and bear bar, possible parabolic wedge, 1, 2, 3. It's at a wedge top, but tight enough channel up. First reversal may fail, and you may have to get a double top. Plus, you're pretty late in the day. It's 14:45, so I certainly wouldn't take that short, even though it did sell off and test down here. So I hope this video helps.